All right, we're up and running here. Okay, let's take a look at what's happened since we left. Nothing. Basically nothing. We worked through all of the positioning. Essentially, we still have just the bears here and here, and some stops in this area, which I think we've seen both plops. First we got this shot up, and the second shot, which ran through the people who are about halfway through, right in this area. Sorry. They got knocked out. So really, no progress has been made in this narrative. It looks like the gappers have come in to try and close up this gap here. And that's about all that we have going. Right now, the market has pushed us back to basically the main place where the bears were sitting. And that's about all that has happened. Just a little bit of progress there, moving the market up towards them. We haven't seen any bulls get sampled today at all. The main function, I think, of today was just pressuring that origin position that we had at the lows when the market screamed down, I think, taking advantage of people who are concerned about inflation. This is just, I should probably make this chart bigger, but I don't want to fuss with that right now. And we have two bearish positions. That's all we have. That's all we have going right now. There's just nothing else. I think a lot of all this activity, which has continued to be crazy, the option activity. Just look at, it's just crazy. Like, look at all these people executing just anywhere, everywhere, everything. And I think this brings in that you could see that people are concerned about volatility suddenly spiking. And okay, I'm not sure that I see anything around here, at least right now, that tells me the volatility is going to spike like crazy. Probably because the bears were able to get tension, the market probabilities were able to go under. That's the only thing I could see that would suggest that volatility might shift and that we see volatility and spike. Your implied volatility number might spike up at some point. That's all that's happened. And in the last 15 minutes, I really doubt that we're going to get a bullish sample like this or like this. So it seems to me that the most reasonable thing for the market to do right now is actually to take a look at this chart. And this one just makes the gap a little easier, is that we have this gap here, and it looks like once we shot up and wiped out those bears that were sitting here, we broke outside of the range. And so you just pick up those tests of the volatility, or sorry, the value area high. And you can see we're filling in a little bit of this area. This was sort of the curve. This is what we've been able to find so far. We're just headed up. It looks like gappers are here to just do that. And that's what gappers are so difficult to trade with, because their entries are so non-existent. They just go. It's almost like gap traders are bears because they have a similar mentality of just like, and now. And everybody's like, why? What was your trigger? What got you to start? Where did you come from? Where are you going? And they just sort of go. And I've seen this attitude out of bears as well. The last couple days, bears have been a little bit more structured about the way that they behave. They've been fitting in the confines of like what's happening and things, but they sort of do that. They just sort of everybody go now. And the gappers seem to be doing, they're just going. It's like, well, what got you going? And I guess because the bears got knocked out, maybe that's what motivated them, because we broke through the high of the day. That could be it. Maybe because we broke into the gap area. I don't know. It's hard to figure out exactly what it is that gappers find important to initialize their gap trade. And the reason for that is pretty straightforward, actually. It's because a gap is a target. And targets don't say when, they say where. And so there's no specific reason to buy. It's just because there's a target there, they go for it. And typically in trading psychology, if you are just looking at a target, if your eye, here, I'm going to draw an eyeball. If your eyeball is just looking at a target and you have no good reason, typically that's a really great way to get yourself stopped out. You should only really focus on targets after you have a successful entry, one that's structured and all that stuff. But gappers tend to look at just the target and they don't care about anything else. And so I would say that if you're trading to try and close gaps, most of the time you're going to get hurt because you won't know when to play. And so if you don't know when to play, then the market can just do this to you. As long as you buy, they'll stop you out. And then the one time when you're like, okay, fine, and you quit, it runs. And the reason it ran is because you quit playing. So if you're just constantly staring at a target, markets will just constantly stop you out, because that's what I would do if I was the market or a casino. Would just stop you out. So that's all we really have going on right now. I think the focus right now is shifted to tomorrow. We're looking at tomorrow. What do we do? And what do we want to have happen? Well, if the bulls are going to regain control of this and this, which they really should, because their origin got defended, so I think that they should try. The first thing they need to do is get some form of advantage. And we've talked about this over and over. Advantage means trapping someone or reducing the counterparty. And you can do either one of these. You can, to get advantage, you can cut down on how successful the winners are. And I think today that happened. The bears did not get any footing and profits. They didn't get extra rotating capital by driving this down. They're losing money. They're in losing positions. Or you can get advantage over a position. So you could trap somebody in. That also happened today. But this isn't necessarily trapping them like the bulls didn't do it. The bears seem to have done it to themselves. If the bulls were here buying, then I would say they trapped them in. But because there's no bulls, this is just the bears coming in and hanging themselves. So tomorrow, the bears are going to need to get a position. I mean, this is going to be, it's the same process we saw on the upside. Tomorrow, they're going to have to do, they're going to have to trap a bear, or sorry, trap bulls and run them out or pump the market. That's what the bears are going to have to do. They'll have to figure out a way to get the bulls to come in and buy. And the constraints I think that the bears have, the bears can't just bring price and just do this and come down and come up and down. They don't have that kind of freedom. The bears have this range to trap in the bulls. So if it gaps down, they could set up a nice looking buy here, and then the bears could come in and try and sell against it and pump them out. Something like that, or whatever, along one of those lines. The bears have to trap in some bulls if they want to continue to pump the market, and they're going to have to continue to pump this down. And the work that's really important right now for these bears to do is to wipe out last Wednesday's lows. This is the work to be done. This is the position the bears need to take out if they want to wipe out this whole bullish trend and get us all the way back down and waterfall profits themselves to the lows. This is the work that has to be done. And to accomplish this work, they'll need to pump the market through there, which means if they just wake up in the morning and run an algorithm, let's say tomorrow we open here and they just run a big old algo, it's coming right back. If there's no trapped trader in here, if there's no participants who are going to get wiped out, if tension doesn't accelerate as you break through the, so you want it to move down and then accelerate as you wipe out some stops, and then continue that accelerate, then they're not doing it right. What they're doing is this problem. And this is the issue that the bears are going to have. If you just pump cash into the market and drive tension, sure, you can short-term move price, but they didn't break down the bull. They didn't take out the origin. Am I sharing the wrong? I'm so sorry. Thank you. Here it is. This is the work they have to get done. Sorry, let's just start there, and whatever I said before, I'll imagine. This is the position, the Wednesday, this low, because this is the origin. Okay, so if they come in here, this is what injecting cash looks like without a counterparty or a loser. Tension rolls, price kind of drops down, and then you get folded over. Is all this money, this massive position that I imagine would cost a single entity $500 million is kind of probably what I think it would cost you to do this kind of thing. All of this capital is underwater, at risk. It's stupid. If you don't trap another institution under, then what happens is you exert yourself, you allocate all your capital across the market, and this. And if tomorrow the bulls just showed up and did this again, it'll come right back up, because so they need to trap somebody in. They need to convince the bulls to hold, and then they got to work those bulls underwater slowly and carefully so that they hold on to their position and take a large loss. If they don't, then we're just going to be looking at a V-shaped market again, because this is an issue. The bulls, and this is one of the problems with the bears, is they move so fast. They suck at structure. They're like, oh, well, if we all just sell. And sure, it does move price because you get short-term demand, but all the capital it costs to do that just gets wrecked over time. So that's the problem. This is the problem the bears need. So the bears need to create some structure. They need those bulls to come in and get this work done so that they can push things down. That's going to have to happen. And that, and in terms of tension, I imagine if we gap down here again, I think tension might open a little lower, but it probably open about the same. And then we should see, it move down and then accelerate. You need that acceleration as we break a low if these bears are going to continue to push this lower. What the bulls need would be to, again, they would need a gap up, because that would get this tension number moving up. And having tension moving up aggressively will get the bears to step back and wait for a position. So if we gapped up, price would rise a little. The bears would look to get into something. The bulls would look to get into something. And we want to see tension rising through there because we want these bears to fail. And then if the bulls come in, they come in. And then as they wipe them out, tension really accelerates upward. It closes like here. Or maybe we get it to gap higher and they get it over zero by the close. The bulls, that's what the bulls need to do right now. If the bulls can't pull that off, then I'm just looking at bearish plays. The bears have control of probabilities right now, so we're just going to look at them. But they have this massive cap because clearly they could not get the work done to break out through that origin position from last Wednesday. So we have to think, hey, the bulls, they're doing great, but the bears are doing great, but the bulls have this limitation on their ability to drive that down. So bears will need to get that work done, trapping somebody in this section before we get to the lows, and then they need to show that they can pump the market down and then trap those guys in as we dump through the lows. Otherwise, this whole situation is going to backfire. All this capital is already underwater, and as far as I'm concerned, if I had a trader on my team who would put all that money in the market and that capital constantly was flipped upside down immediately into risk both times, and they couldn't take out the main bullish position, I'd say you need to be very concerned about your position right now, because your cash injection is starting to look a lot riskier than it was earlier. Like a lot riskier, unless we can get some work done here. So I think that the bulls are going to probably be able to defend these lows, but it's going to really depend on tomorrow if we can get some positioning. I'm anticipating the market wanting to create some sort of bullish position down here again, because we didn't have anything in the lows today, and bulls love lows, and that could potentially devastate the bulls if they do it. If we move down, the bulls get their position, the bears come in, and the bears are able to push that down and use that to keep the market down. That could be a big problem for the bulls. And the bears are going to be looking at that for sure, because they need to get that work done. If they can't get that work done, let's say that the market opens, it comes up, bears come in, the market moves down, the bulls come in, and the bulls hit, and it's coming up like this. It's like, this is an issue because the bulls, I think, they're getting support from this. So they're going to be hitting that up, and we're going to be looking at getting through here pretty quickly. But I think the next objective is to create a bullish position closer to the lows, or at least closer. So right now, I guess short term, I'm bearish about this. I think it should move down first, pick up a bullish position, and then if that bullish position can be successful, then I think the bulls are going to just maintain their long-term bull. So long-term, I'm bullish about this. Conditional on the fact that the bears can't turn some bulls over tomorrow and take out a major position. If they take out that major position, my longer term is going to start look a little bit more bearish. I think the market's going to be moving down. So your risk is up right now. Perhaps that's why this is going on. If they can, well, I think we're going to see the market move down. And where down would I think it moves? To make these estimations, I always pull up these charts. That is just not a lot of anything real clear that close historically over here. So I think if we broke these lows, we'd see the statistical advanced decline dip down, and that's the thing that would start developing out the lows, the future lows, wherever they may be or whatever. But it's been mostly sideways as we work through this situation. Let's get a little longer term chart here. This one. Scoot back. So, okay, so as a rule of thumb, the way that I think most bull trends work is like this. There's some sort of fight going on, and then some sort of bear trap. The market moves up, and then right about here, you'll have this situation where there's a bear double down, where they make the mistake of trying to like double down on their position. They try to like, they don't let go of their short, and they keep adding to it, and then the market just runs them. And then you get into the situation we're having now, where that you start to have, some selling, some bearishness come into the market, and the objective would be to get back to where that they made the mistake. That's not a straight line. I can't. That's the way I'm holding this. But okay, there we go. That would be where that I'd look for. So you'd go back to where the bears had made that mistake, and that's going to be the spot. And that's probably going to be a point. It looks like this in price action, where you have something like this where it sort of grinds, and the next day it just gaps up, and then you never really close this gap, because this kind of market tends to be where the bears double down, especially out of a nice low. And then you have the bears just selling, and then they realize they're wrong, so they get screwed, and it keeps going. And then it's like, oh, it closed that gap. But it wasn't really closing the gap so much as it was coming back to where bears had doubled down on a position they absolutely should not have doubled down on, which carried the market higher. So that's what I'd be targeting. I'd have to go back through. Maybe I'll go back through later on to figure out where the last time that we saw double down. I can't remember offhand a specific time in this trend that we saw that. Anyway, there it is. Market closed. We got right back to the VoLTE, and I think that overnight there's a decent chance we see some downside movement. Keep your eye on VoLTE. It's probably going to flatten out a little bit here, and we'll hang out around there, get a little lower, see if we can open, pick up a bullish position, pop this up tomorrow, and then the bulls can get back to what they've been doing. If they can't do that, be concerned about a bearish move down. So I don't want to see the bears trap in some bulls tomorrow. That happens, and I know their goal. Their goal will be to blow out the lows from last Wednesday. They want to get it down there in a very aggressive way. If they can trap in bulls, it's going to be a really big deal if they do that. If they don't trap in bulls, I just think it'll pop back up. Options like crazy today, so we know that the options market is real active right now. So a lot of positions are going to be just, I don't know. Options traders do things that I disagree with, but looking at the market, there's just the interest rates are probably the most directly interesting that are going to influence the markets, at least right now, and that'll change going into tomorrow. So short term, I think we have a good chance of a move down tomorrow. Long term, I'm still bullish until it breaks. Once it breaks, I'll switch my tone, but I'm trying to make this really clear so you understand why I would switch my direction, so it's clear to you when it happens. You don't need me to tell you. Like, you can look and see, and then you can be ready to go if it does or if it doesn't happen. But right now, I'm still long-term bullish. I'm not getting into any long-term bearish positions or anything like that. Just trying to prep you so you could see how it works, so you can be ready. You don't want to scramble for what to do when you see some event happen and try and figure out what it means. You want to say, oh, that's this situation. We already knew that was coming. That's a big deal, to help you react correctly and know what to expect. Okay, if you have questions or anything, you can shoot me questions on Twitter, on Discord. I'd like to see your charts, what you think. We can collaborate. Otherwise, I'll be back tomorrow. Good luck trading, guys.